Hello there, welcome to myfinanceteacher.org, where our data-driven approach guides every step of our journey towards maximizing profits. Today, for the data, I want to have a look at energy, specifically crude oil and natural gas. This is the chart of crude oil. In one of my previous videos on crude oil, while I was suggesting that an intermediate cycle low might have come on crude oil in mid-November, I also mentioned that such a cycle would be relatively short, a bit shorter than usual at only 141 days old. And looking at history, a couple of previous cycles were shorter than usual as well, which usually leads to a slightly longer than usual cycle to bring the typical duration back towards that average of around 5 to 6 months. So this cycle has been going on for 168 days. We see a bit of a rally in crude oil over the last week or so. By the way, I discussed crude oil with the members at myfinanceteacher.org over here on the 14th of December. That would be when crude oil was somewhere around $71. Since then it has rallied to over 75.4. It came pretty close to testing that support zone around 67.4. We've seen multiple pokes below a relatively wide Bollinger Bands, and RSI came pretty close to oversold. All of those are signs of an upcoming reversal in momentum. In this case, from the downtrend towards an uptrend to a new crude oil cycle rally. Again, as these cycles last for around 5 to 6 months, I would expect around 3 months at least of a bit of an upward momentum in crude oil. As I discussed with the members, looking at producers, this is XLE, it has been outperforming crude oil itself. That's while crude oil came close to testing its summer lows. XLE, the oil producers, didn't drop as far, again, showing us some sort of a bullish divergence from the producers. So perhaps the smarter participants on the market were expecting crude oil to give us that cycle low and at least a bit of a rally over the next 2 to 3 to 4 months. Talking about the market participants, let's look at market sentiment. It has recovered over the last few days, but recently it bottomed as low as 37. And usually, historically, these cycle lows in crude oil come with this optimism index, either just below 50, that's during the good times, as in mid-2021, or somewhere around 30, that's during the hard times, as in early 2023, for example. As the recent hype came with the optimism index close to 70, I expect the upcoming half a year or more to be the good times, and perhaps this recent low in market sentiment at 37 that didn't drop as low as 30 but dropped far below mid-40s is a bit of a transitory period from these hard times towards what I'm expecting to be good times for energy. After all, looking at crude oil stocks, all the way since mid-October, last week was the first time when we saw crude oil stocks starting to decline. Hence, if crude oil stocks continue to decline, that of course will be bullish over the next several weeks. Next, looking at crude oil seasonality since 2015, that's since the end of that bear market for commodities, we see that seasonality agrees with our expectations of a cycle rally for crude oil lasting for 2 to 3 to 4 months, all the way into early March. Looking at this bottom right, we see that December, January and February are all usually green months for crude oil. Hence, crude oil is looking bullish over the intermediate term, and again, we've discussed all of this all the way back in mid-December with the members at myfinanceteacher.org. So for more regular updates, make sure to join us. Next, moving on to natural gas, which we discussed as well. Natural gas is turning out to show us the longest cycle all the way since at least mid-2017 or perhaps even longer. Again, as I suggested to the members in mid-December, natural gas has probably given us the cycle low on the 13th of December, with the cycle lasting for a very long 195 days. Zooming out, we see that RSI came as low as it's basically ever been, looking at this late 2015. Again, as I mentioned, the end of that bear market in commodities. That's the last time that RSI was comparatively low. But even then, the 14-day RSI came all the way down to 18.8, whereas more recently we've seen RSI all the way down at 17.2. So perhaps a new record here as well, together with the length of this cycle, suggesting that at least a short-term bounce is quite likely. We also see 1, 2, 3, 4 multiple pokes below very wide Bollinger Bands. That's another sign, as I mentioned, of an upcoming reversal in momentum. Since that post, again, natural gas is up perhaps 1 or 2 percentage points. And market sentiment is improving as well, having dropped all the way down to 23. That's the lowest we've seen the natural gas sentiment since early 2020. So again, at least a short-term bounce is likely, perhaps even a rally over the next 2 to 3 to 4 months into a new natural gas cycle. Although seasonality doesn't really agree with a longer rally. Again, looking for natural gas seasonality since 2015, we see that usually December, January and February are all red months for natural gas. But as I mentioned, due to how oversold natural gas was several days ago, perhaps a bit of a short-term bounce is likely. Hence, if you are playing this short-term bounce, one strategy here would be to take your profits relatively early, perhaps at a bit of a retest of the 200 or the 50-day moving average, and keep your stop loss relatively tight, so that you don't get caught with that likely drop down into a seasonal low in February or early March. So good luck with your trades. For much more regular updates on a range of assets, energy as well as some of the most promising junior miners, scroll down a little, you will see that juniors in metals category on our website. So for all that data-rich updates, make sure to join us at myfinancesteacher.org. Simply click this Join Now button, and by the way, the membership fee for new members is going to increase in January. Have a wonderful Wednesday. Bye-bye.